Good morning from our global headquarters in New York. I'm Manus Cranny with Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Guilty as charged, former President Donald Trump found guilty on all 34 counts just 5 months ahead of Election Day.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace.
Dell plunges after earnings. Its AI server business fails to impress high expectations. And it's the countdown to PCE. The latest inflation data is expected to show a slight moderation in April. Good morning, Manus. Anyone hoping for a boring end to the week is badly mistaken.
Absolutely. History in the making, both in terms of the former president now being found guilty. He's a felon. And there's another thing in Washington as well. Data, we'll talk about that in a moment. We've got European data, and that's worse than we estimated. We had a hot print in France. That was a hot headline a little bit earlier. But now we have core PC coming in at 2.9% year on year, plus 0.2% on the month. So again, Danny, we saw energy as the protagonist in the French inflation numbers. So this is certainly more than they had anticipated. 2.6% in May. The median estimate was for 2.5%. This is not what the ECB are going to want to hear. The chief economist, Philip Lane, a little bit earlier this week, talked about the appropriateness to take monetary policy to less restrictive, even if there is a bounce around this year in the inflation. So in the very first instance, that's a little bit of a hotter print.
For what it's worth, month over month is bang in line, 0.2%. There had been a wide divergence of what people expected. One bank expected flat, the other expected up 0.7%. But it goes to this confusion, Manus. We know, at least we think we know, that the ECB will be cutting next week, will be cutting next Thursday. What happens after that? It is still an unknown point.
Well, the question is whether ECB and the Bank of England, as you said this morning, interestingly, their hands are a little bit tied as we go towards the election in the UK. The rest of the markets, there are markets as well as politics to play with this morning. There was a gouge taken out of Dell yesterday, and in many ways this tech index had a couple of massive moments yesterday. Dell was down 14% at the moment, as of course their guidance did very, very little to invoke a spirit on the upside. The market's still disappointed with the backlog, but it really was the Nvidia and the AMD as well, which also took a little bit of a smack yesterday. You saw Nvidia down by 4% and $100 billion wiped off the value. It bounces back by 0.25%, as of course there's a delay in the new licenses, we understand, in a Bloomberg scoop, to the Middle East. Bad news is potentially good news was the bid side, slower GDP, slower personal spending, maybe something that the Fed will look at in terms of the rates market. Williams sees ample evidence of restriction and an easing in the second half of the year. Of course, the short end of the curve touched, remember, 5%, almost 5% a little bit earlier on this week. And I like what Waldron said at Goldman Sachs. They've got to slay the inflation dragon. Iron ore is in there because, of course, China factory activity, Danny, shrank for the first time in 3 months, and that certainly will unseat a little bit of that growth trade in China.
I am just looking at bonds extending their losses. Yields are higher by 0.05, 5 bips so far this morning off the back of that hotter ECB data. And this is the question, Manus. We're going to get a drip feed of data today. We've already had the Eurozone's CPI. We're going to get PCE today. Is that what we need to concentrate on, or is it ignore politics at your peril? At this moment, the VIX is pricing in a kink in the curve for the election. It's earlier than it usually does it. You could say, maybe it's just because we know who the candidates are sooner than we usually do in an election cycle. Or are we pricing in turmoil? Are we pricing in the unknown entity of what happens around the election, whether we'll actually be disputing the results and what policy will look like in 2025?
Well, we're certainly going to go through a lot of hubris between now and July the 11th in terms of the former president and potentially the GOP, probably the GOP nominated candidate could potentially be sentenced on July the 11th and could, if extreme scenario comes to play, could be behind bars for the Republican National Convention on 4 days later. But we're going to talk more about that in a moment. Let's get to the main headline and dig a little bit deeper into what we heard yesterday evening. The former president, Donald Trump, found guilty.
Donald J. Trump is guilty of 34 counts of falsifying business records in the first degree to conceal a scheme to corrupt the 2016 election.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. The real verdict is going to be November 5th by the people.
Manus, as you mentioned, sentencing is now set for July 11th, but Trump is all but certain to appeal.
The jury listened. It rendered a unanimous verdict. There will not be a conclusion to this until July 11th. And when that occurs, hopefully everybody will respond to that the way they're responding.
Well, President Biden reacting with one post to garner votes with 5 months to go until the presidential election. There's only one way to keep Donald Trump out of the Oval Office, at the ballot box. And again, calling for donations to the campaign. And both sides were out asking for donations. David Gura was outside the courthouse in Manhattan for the team yesterday. David, good to see you this morning. A long day yesterday. I'm sure we'll get our value out of you today. Again, well done to you and the team. Great coverage yesterday evening in Washington before we went to bed. But here we are. We now move into perhaps a new phase. We have history already made in terms of Donald Trump being found guilty on 34 counts. What I want to know from you is what happens next? We're talking about sentencing. What is the real risk of prison? Because that won't stop him from running for president or indeed being elected.
That's correct. I mean, nothing about the verdict yesterday precludes the president from running again for the presidency, and he is keenly focused on November the 5th, on the general election. Yeah. Of course, July the 11th looms very large. Before we get to that point, we have to get to the sentencing date, and this is entirely up to the judge. It's a discretionary move on his part to decide what kind of sentence the former president is going to get. Now, he's a first-time felon. This is a low-level felony. Lawyers I've spoken with say it's very unlikely that he'll get any prison time. But again, it's up to the judge. The judge has indicated that he's amenable to that or open to the prospect of putting Donald Trump behind bars. There was a moment during the course of the trial when, after Donald Trump violated the gag order numerous times, for a $1,000 fine each time, he recognized that wasn't much of an incentive for the former president to stop talking and raise the specter of putting him in jail. So it's something that the judge is clearly aware of as an option and might do. That would be extraordinary. And I think that what we've seen all along over the course of these proceedings is in awareness of the unprecedentedness, historicalness of all of this, the judge being very careful to tread lightly in light of that.
Right. And I mean, it's obvious, but it is uncharted territory. We've never had this before. So what do we know about how the voter base, how Trump's voter base, how independents might react to this?
And there's a lot of calcification in the Republican Party right now. There are people who stand behind Donald Trump and are going to continue to stand by him. There's a sliver of that electorate that might find this distasteful or changes their opinion of the former president. We don't fully know how large that segment is, but we saw in the immediate aftermath of this verdict, high-level members of the Republican Party, many of whom had made this pilgrimage from Washington to New York during the course of the trial to stand behind him outside the courtroom. Some of whom went in the courtroom to sit behind him as the proceedings were underway, backing him, putting up statements decrying the process that had taken place, decrying the justice system more broadly. So the party itself had been coalescing around him, obviously, in terms of how much he'd moved in the primaries and is the de facto nominee for the Republican Party, and we're seeing kind of them doubling down on that now.
It's interesting. Terry Haynes over at Pangea says it's neither a seismic negative event for Trump's candidacy, many had hoped for, and nor is it a meaningful boost for Biden. Let's talk about the Biden House. Both sides put out a call to action for money yesterday, but Biden needs to shift the narrative now. It wasn't so much about the hush money that we need to focus on, but it's about shifting the narrative that this was about manipulating an election. Is that where the Democrats move to in their messaging? I
think you see in that tweet that you put up, that X post that you put up, the way that the White House is framing this, and that is the real verdict on this is going to happen at the election. I think that the White House is obviously probably pleased with what the verdict was yesterday. They can paint him as a convicted felon, paint Donald Trump as a convicted felon, but I think that they recognize that this election is going to be won or lost among the American people on policy issues going ahead to November. You're right about this being an effective fundraising tool. We saw the Republican Party, we saw groups affiliated with Donald Trump raising a ton of money yesterday. Democrats obviously trying to capitalize on that as well. We'll see how all of this plays out. Again, there's this kind of interesting vacuum that's opened up here in this month ahead of the sentencing where the president is keen to move this from kind of the legal arena to the political one. All the while, he still has to keep this foot in the legal arena as the appeals process gets underway.
Right. Well, that's interesting because it sounds like both president and the presidential candidate are saying that the verdict will be decided in November. So almost similar messaging when it comes to that. David, thank you so much for getting up early for us and joining us. That is David Gura, host of Bloomberg's Big Take. All right, Manus, let's get some of the other top stories that are trending on the terminal this morning. China's factory activity unexpectedly contracted in May. The reversal in manufacturing after 2 months of gains is a threat to Beijing's economic growth targets. And there's an additional risk in the pipeline for Chinese manufacturers with trade tensions escalating.
Bank of America CEO Brian Moynihan says the firm's investment banking group is on track to report a 15% growth. The group seems to be continuing its positive momentum as companies return to capital markets and deal-making. Moynihan also says the bank now expects net interest income will be 1% lower than previous projections due to deposit pricing dynamics.
Tesla shareholders are being urged by institutional shareholder services to reject CEO Elon Musk's pay package. ISS says the $56 billion package was outsized from the start. The opposition comes days after another prominent proxy advisor, Glass Lewis, rejected Musk's pay.
Coming up, we catch up with Max Kettner of HSBC, his version of good news and bad news, and the view on the Trump verdict.
And U.S. officials are putting limits on AI chip exports to the Middle East. We're going to discuss that, what that means for tech giants like NVIDIA, here on Bloomberg Brief. It's your Bloomberg Brief. I'm Danny Berger with Manish Cranny in New York. Now, Manish, we have a historic verdict of former President Trump. It's not only impacting politics, but could it impact markets as well? Ed Yardeni, founder of Yardeni Research, writes that the stock market has a history of tuning out domestic political turmoil. However, the political climate is clearly going to be even more volatile after the Trump verdict, which could increase volatility in the stock market. Let's bring in Max Kettner, chief multi-asset strategist at HSBC. Max, is this time different? Should we be pricing in more volatility for this election?
Yeah, good morning. No, I don't think so just quite yet, because, I mean, number one, when we look at volatility right now, when we look at the VIX, you know, even after this week's wobbles, we're standing around 14, so we're standing on pretty low levels. Should that really change? I don't think so, because when we look at the recent gains in particular, they've really been driven by a handful of names. They've been driven by NVIDIA, again, by these AI hopes, by these really solid earnings. Look at, for example, not only at the US, but globally in equity markets. Look at the European earnings season, the EM earnings season, the US earnings season, of course, as well. We've had really, really strong earnings during the Q1 reporting season. And to me, I think those fundamentals just trump the election volatility, really, because when we look at it, you know, at the end of the day, we're not going to really sell tech or buy tech, given what the latest polls are going to say. At the end of the day, it's really about their earnings power and about the margin resilience that particularly the US is showing, and even outside of tech, where we see that margin resilience. At the end of the day, that, I think, is really much more important.
Yeah, and look, you've mentioned NVIDIA, and we've touched on this a couple of times this week. In other words, their propulsion higher after their results did very little for the rest of the market. I want to touch on the data. I mean, there's two events in Washington. One is political, and one is, of course, data. Now, you are skeptical of the, let's say, economic surprise that we've had. This beautiful chart that we have for you, which shows the ratcheting higher, the weaker economic data. But you say you're a little bit mistrusting of that. It's not as bad as the chart might suggest. Even though you had this slowdown in GDP and personal spending yesterday, you still hold tight to the "I will not be shaken. Bad news is good news. Long live Goldilocks."
Yeah, 100%. Simply because when we look at the nowcasts for the second quarter, we've moved from above 4% real GDP nowcasts for the second quarter to currently somewhere around 3.5%. Now imagine, instead of negative surprises in the last month and a half or 2 months, imagine we had positive surprises instead. what we would be talking about, we would probably be talking about like 5-ish% real GDP growth in Q2. Add, just for the sake of it, add 2% inflation on it, right? Even though that at the moment sounds, not really realistic, but even that would bring us to 7% nominal. If we were talking about that 7% nominal growth in the second quarter, we would really not be talking about rate cuts anymore. We wouldn't be talking about when does the Fed cut rates. The debate would be how much does the Fed have to hike. So actually, those kind of mild downside surprises that we've seen in the hard data, that are, they are really not too discomforting, because at the end of the day, they bring us down to slightly healthier growth levels. And let's remember, 3.5% is still twice as high as potential growth in the US. So it's still really strong growth numbers for Q2.
And Max, for the most part, that's how this market has reacted. You could see it earlier this week. The quote-unquote good news of stronger consumer confidence meant that stocks sold off. But yesterday, we got the baddish news that you're talking about. That seems like it would be perfect to have that narrative of bad news is good news. Yes, growth comes in a little bit, but inflation also comes down. Yet this is a market that sold off. Has something changed?
No, I don't think so. We will have those occasional days where, of course, those idiosyncratic, these single name stories are probably sometimes overshadowing the bigger picture, right? So at the moment, what we're really seeing is that the market is moving from one extreme to the other. Look, for example, 1 month ago, we would have talked about stagflation. The 10-year yield just moved up from sort of 420 to almost 480, and then we had input prices higher, commodity prices higher, and people were suddenly talking about stagflation or those negative surprises being the first signs of a recession. And then came retail sales and CPI, and suddenly that was all over just because of 2 data points, and suddenly for 3 weeks it was all rosy and it was all Goldilocks and no signs of higher inflation whatsoever. And now, yesterday, for example, we had, of course, Salesforce. We had a bit of an idiosyncratic wobble there. But, when we look through those really day-to-day idiosyncratic stories, I think it becomes pretty clear that inflation is stuck. It's not really picking up hugely, but it's also not going down, and growth is just fine. So that means when you want to trade tactically, it's probably more on the rate side. But equities, high yield credit, emerging market debt, risk assets overall really should be doing totally fine, because growth is still on such firm footing.
Mac, you've gone very, very British. Terribly fine. I love the phrase. It should be terribly fine. Don't ever lose your inner German. Briefly, in 30 seconds, is your bullishness on high yield a yield enhancement program on top of the portfolio? Briefly.
Yes, 100%. I think the spread overall, 300, doesn't look particularly attractive, but all-in yields around about 8% look very, very attractive, or terribly attractive even, when we look at, of course, when we look at that. And of course, for non-dollar-based investors, if you're looking at US dollar high yield, you're long the dollar. And if something goes wrong, the short end of the rates curve should be going down, and that helps you as a hedge as well.
Well, we're delighted that you joined us, and we're terribly excited about the high yield enhancement. Max Kettner there. On the context that matters in markets. This is Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manish Kranny in New York. So Dell reported its first revenue increase since 2022. But Manish, it is remarkable the extent to which investors are willing to punish any miss. Down 13.5 in the pre-market, with high expectations for its AI server business that it didn't live up to. Let's dig into the results with Bloomberg's Kriti Gupta. Kriti, it's like Salesforce all over again. The numbers are okay, but the market punishes them. So what went wrong?
Well, the bar is quite high for a variety of reasons. You have to think about this in the context of Dell kind of being this old guard of tech alongside the likes of HP, for example, along the sides of Oracle. The onus is really on them to show that they can really capitalize on this AI trend, as opposed to really stick to kind of that hardware business that they're so used to and have been rallying off of for the last, I want to say, 2 decades or so. Look, the numbers were great. The sales were up. The revenue was up. They're talking about this record backlog when it comes to these AI servers. So there's a couple of things that went wrong here. One, the expectations were really, really high. And you're seeing this go from a lot of the names that are starting to say that crucial artificial intelligence phrase. The bar to impress is only getting higher. And you can see that with likes of NVIDIA, for example, as well. The other piece of this equation, Manis and Danny, you pointed this out in the break, the concept of margins. I believe you pointed out from Bernstein, but you're getting it from JP Morgan as well. And I think this line really struck out to me, that the margins are coming in below expectations for both the reported and the guided 2 quarters. So it looks like there's a little bit of pressure on not only getting in on the AI trend, but making money off of it as well.
Yeah, well, it was a heck of a smack that they took, wasn't it, in terms of the overall performance on the day, down the most. What was it at one stage? Really took a pacing, down 18%. Let's talk about the other chip makers, because we understand there's a delay or a slowdown in the licensing, in the export licenses for NVIDIA chips to the Middle East, for AMD to the Middle East. What's behind this story? I mean, this is a sources story, so what have we got?
Well, this has a lot to do with national security, not particularly in the Middle East, but this campaign from the Biden administration in particular to make sure that that technology does not make its way into China. And there's worry that the access that the Middle East might get might ultimately end up there. That being said, when you talk about the market read-through, remember, NVIDIA and AMD are both really trying to diversify their business, not in terms of getting outside of just the hyperscalers in the United States, but really taking this global. The fact that there's a little pullback in those export licenses is the cause for concern. So you did see NVIDIA take a bit of a hit yesterday, dragging the entire market lower. And you're already seeing that read through this morning into Europe as well, and certainly in the Hang Seng Index over in Asia.
Yeah, NVIDIA, down 4% at one juncture, 100 billion off the market cap. Small bagatelle, really, to NVIDIA. Critty, thank you very much. Coming up, a little bit more on the former president, Donald Trump's verdict. That's next. Context Matters on Bloomberg.
From our global headquarters in New York, I'm Danny Berger alongside Manis Cranny. Let's set your agenda.
Guilty as charged, former President Donald Trump found guilty on all 34 counts, just 5 months ahead of Election Day.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace.
Dell plunges after earnings on the AI server business, fails to impress investors' high expectations. And it's countdown to PCE, the latest inflation data expected to show a slight moderation in April.
We already got European inflation data coming in slightly hotter for the headline. That meant bonds lower in Europe. In the meantime, it is an S&P that's down 0.2%. It is a head scratcher. Is the bad data good news? Is bad news good news? Max Kettner says it still is, but that's not how the market treated it yesterday. We sold off, we sell off again. NASDAQ futures even lower, 1/3%. It is Dell that is dragging us lower. It is a market whose propensity is to punish any company with any slight miss. U.S. 10-year yields, that perhaps the more logical response. Yesterday, we got a rally. Today, a slight sell-off, higher by 1 basis point. But man, are we in this environment where it's ignore politics at your peril? Ed Yardeni says that, look, this time around, there's potentially more volatility you need to price in. Max Kettner, who we just spoke to from HSBC, said earnings are still good. The economy is still strong and inflation is moving in line. So who cares about politics? The fundamentals are strong. You can be max bullish.
Look, the bond markets are really only going to raise their eyebrows when they know the color of the administration that's going to be in the White House next year. And that has fiscal consequences. You have a tailwind from fiscal boosts going through this year. They're still there, the Inflation Reduction Act, etc. It's interesting how the PCE has been trumped by the news flow on the front pages. There are 2 events in Washington today, not just, of course, what happens politically and the responses, but just in case you missed it, it is 5:30, 17 seconds. And we will talk about the PCE at some juncture.
No, but I think that's exactly right. That 2025, we don't know what it's going to look like.
It's so much more exciting to talk about politics than it is about the PCE, to be fair.
Yeah, it is. Unless the PCE is something crazy and dramatic. And then we have 2 dramas to deal with. One is maybe more historic and consequential than the other. So let's talk about that one. It is former President Donald Trump found guilty.
Donald J. Trump is guilty of 34 counts of falsifying business records in the first degree to conceal a scheme to corrupt the 2016 election.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. The real verdict is going to be November 5th by the people.
Well, sentencing is set for July the 11th, but Trump is all but certain to appeal. Here's the Democratic Congressman Jim Sylburn speaking to Bloomberg.
The jury listened. It rendered a unanimous verdict. There will not be a conclusion to this until July 11th. And when that occurs, hopefully everybody will respond to that the way they're responding.
President Biden, for his part, reacted with one post to garner votes with 5 months to go until the presidential election, saying there's only one way to keep Donald Trump out of the Oval Office, at the ballot box. Joining us now is Bloomberg's Anne-Marie Hordern. Anne-Marie, we have this historic and uncharted event that happened yesterday. So what now?
It is historic. It's uncharted. We've never had a former president, let alone the next candidate on the Republican Party, to be president convicted guilty of 34 crimes. And that's what we had last night. Now it's all about the timeline and what this potentially would mean as well for voters. So when it comes to the timeline, obviously everyone is focused on July 11th when we'll get that sentencing. Obviously, Trump camp already has insinuated and said out loud that they are going to appeal. Before that also, it's going to be a vote, basically, these two individuals, Biden and Trump, trying to garner votes. There's going to be a debate at the end of June. That's going to be important because how does Biden talk about this conviction? The only thing we really saw yesterday was the campaign talk about the fact that the one thing they potentially both agree on, Trump and Biden, is that this is going to be decided by the American people at the voting box. And then that's the second point. The polls are really mixed on what this means for the electorate. So here are two key ones that were recent. PBS NewsHour, NPR, Marist polling. They say 67% of voters said a conviction would make no difference to them when they cast their vote in November, including 74 of independents. Remember, if Trump's going to win, it's not just his own people he needs to bring to the ballot box. It's those in the middle. But then we had a Marquette Law School poll of registered voters, and they found that a guilty verdict would produce 4-point win for Biden in a national hand-to-hand matchup with Trump, while a not guilty verdict would have resulted in a 6-point lead for Trump. So you could see it's mixed, and that's why the messaging is going to be key.
But then where does the messaging go? One of the themes that came out yesterday evening during coverage was the Biden administration needs to shift the narrative along. Not so much that it's around the hush money aspect of this trial and the conviction, but it's about the potential impact on an election, and that's where the tip needs to come. The shift needs to come in terms of how you present what happened on these 34 counts yesterday.
I think the one thing the Biden administration is going to want, either the president when he's out campaigning, and especially in front of donors, or if you have any of his surrogates out on the trail, he's going to want to basically just say, Trump has become the first former U.S. president guilty of crimes, period. The issue is they probably don't want to go too much into this because they don't want to see that they're trying to weaponize what the Trump campaign says they are doing, this verdict. So it's a tightrope that he needs to walk. But again, both camps will be using this in both directions, and we saw it last night almost immediately to fundraise on.
Do we know if Trump can vote for himself? Or is that still an unknown thing? Like, because in Florida, right, if you're a felon, presumably you can't vote for himself. I mean, what is sort of the mood among the Trump camp, especially coming out of yesterday? This historic thing, a felony. I mean, are they just gung-ho, guns a-blazing, or were they seemed surprised by this?
I don't think they were surprised, and you heard that from his legal team, that they were expecting this. They will continuously say this was done by a jury in New York, a state, obviously, Trump did not win, a state that leans very blue, and they will talk about there's this inherent bias already in this jury. There's one interesting thing that we did write about, and this is according to people familiar with the matter in our reporting. This is something that Trump didn't want. Despite the public-facingness of the campaign, despite that they're coming out and they're saying we're going to fight this, you know, a bull in a china shop, this was wrong, this was a disgrace, Trump did not want to be convicted as a felon.
No, I mean, no, look, that's not the optimal scenario to go to the ballot box or to the American public, even though the polls suggest that his core voters, the GOP voters, weren't going to be swayed that much. I was looking at one of the ABC polls. They're not going to be swayed that much by this conviction. Money talks, okay? Money really talks. Schwartzman standing behind Trump. Haley has put her political baton behind Trump. We're going to talk a little bit more about Bill Ackman in just a moment. A little bit of breaking news on that. We understand he is readying to back Trump. So the donors, the real private money donors, and I emphasize the word private versus public, they are unabashed and unafraid and not dissuaded from backing Trump at this juncture.
That's correct. We heard from Steve Schwartzman on Friday. We're waiting on potentially this endorsement from Bill Ackman. Bloomberg had some reporting on that. Sheldon Adelson's wife, Miriam, is planning on also backing Trump going into this election cycle. And then we also had other names. Sean McGuire, partner at Sequoia, coming out yesterday saying this verdict meant that he actually wants to put money behind Trump. He's talking about a lot of money. And obviously there's a lot of laws regarding how much you can donate specifically to a person, but there's super PACs. There's other ways to go out and support Trump. So you do have people coming out and saying that they're unnerved by this verdict. At the same time, Terry Haynes of Pangea says actually he thinks that this means that Wall Street's going to maybe want to take a step back, pause, and not put all their money into it. But so far, we haven't seen that, especially with some key names.
Well, Terry doesn't say, I mean, he also makes the point that it's not exceptionally injurious at the moment. It's just going to be harder for Trump maybe to unify the GOP. Anne-Marie, great reporting. Look forward to you and the team covering the next couple of hours on this and beyond. Now, we spoke about Bill Ackman, didn't we, Danny? Of course, we have breaking news that he plans to IPO Pershing Square this as soon as next year. Now, this is a Wall Street Journal article, and we're looking at potentially a valuation of $10.5 billion.
Okay, this to me is kind of strange. One, we talked about this yesterday when we were talking about the IPO of Golden Goose. It is a bad market to IPO into unless you are a tech company. Also, just a hedge fund IPOing. This is something that happened a lot before the financial crisis, but it's really dried up since. It is a fickle business that is extremely cyclical. But Manus, I can't help but wonder whether Ackman is trying to capitalize off of his social media fame. He's been tweeting a lot recently, especially about campus protests, the Israel and Hamas war. He had a prospectus out last year about trying to get approval for a more retail-oriented fund. And in that, he said, we're doing this because he has a big social and big public profile. So is this the same thing?
Well, I think of the debate, if you think, yesterday we interviewed the CEO of the sneaker company in Italy, and as you said, the successful IPOs have been in the tech space, not in the finance space. And as to regard his newfound sort of presence on social media, if we look at Schwartzman's backing of Trump, Schwartzman's backing of Trump is driven around the politicization, the anti-Semitism that he believes is very, very present. So there's a number of motivators for two different sizes. But Ackman going for a $10.5 billion IPO, we understand, from the Journal. Context matters on Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. You know, there is some other news today besides the Trump trial. It's the PCE today, and we're counting down to it. And as we are, Dallas Fed President Lori Logan did speak yesterday, saying that policy is just not as restrictive as we think it might have been relative to the level of interest rates before the pandemic. It's really important to keep all options on the table and that we continue to be flexible. Sounding a little bit different than Williams yesterday. Joining us now to break it all down is Bloomberg's Mike McKee. Mike, let's start with the PCE data. What's on tap? What are we expecting?
Little change in what we've seen in recent months, but a slight move to the downside, which would maybe give the Fed some more confidence about inflation continuing to fall. PCE came in up 0.3 last month. It's expected to come in up 0.3 this month, and no change in the headline number. The PCE core may come in a little lower, according to the experts in the forecast, the consensus forecast, 0.2, and that would give people some reason for hope. But all this ends up, going to 3 digits and rounding. Also important, though, the income and spending numbers. If incomes fall or don't grow as much, people will have less money to spend. And then the question is, if retail sales have dropped off, did spending on services fall as well? So a lot of information today in the day's other story.
Well, we certainly know that the Fed, the other story. Well, there are two events. There's two events in Washington. Well, one is in New York. The consequences is in Washington. When we look at the trend within PC, we understand the transportation costs may well come down ever so slightly. But when we look at the 1 month, 3 month, and 6 month PC, it's still nowhere near where the Fed needs it to be if it's going to act just on inflation narrative, disinflation narrative alone. And I emphasize the word alone. We'll come to the jobs number in a moment. But the trend is still not materially the friend of the Fed.
No, it's not. And the question today that people are going to have, and what the Fed's going to do, is deconstruct this report and see where the inflation is coming from, if it's one-off stuff, or do we finally get rent prices going down, which they've been waiting on forever. And then, man, it's one thing that you and I have talked about before, the POGO problem. Portfolio management it has been very inflationary because as the stock market goes up, the Wall Street people get paid more on commissions, and that has added to inflation. So that's something to keep an eye on as well. There is an expectation that that could go up a lot, and you can see why with the S&P up the way it is.
As a former broker, I have no objection whatsoever to brokerage fees and assets under management rising incrementally and in a fair way and in a just way.
You're so kind to your ex-colleagues, Manus.
Yeah.
Wanting the best for them.
I just want to make sure that my rich friends stay rich so that we've got houses to go to when I get a little bit older. There's
it's a good strategy. I like this.
There's a good strategy. Mike, thank you very much. What motivates me on a Friday morning? Let's talk to Kathy Bostjancic. She's the chief economist at Nationwide Mutual Insurance, and she writes this. Kathy, good to see you this morning. Let's just put in context where your thoughts are. We still expect the initial Fed rate cut in September, with the risks tilted towards later and fewer cuts, as long as the economy stays resilient and inflation is stubborn. Do you think we should still be talking about, Kathy, good morning, still talking about the risk of stagflation?
Good morning, Menace. You know, I don't really see this as a stagflation environment, right? It's very different than the 1970s. But I could see why people think of it that way, right? We do have economic activity slowing or moderating, I think is a better word. And we see inflation remaining elevated and sticky. And it's certainly higher than what the Federal Reserve would like, as you pointed out. Even if we get a lower print on core PCE, that 3 month, 6 month annualized run rate is still high. So, I do think that the Federal Reserve is going to continue to be more cautious here, just as we heard from Lori Logan and some others. They're questioning whether they have the right level of restrictiveness for the economy right now. And part of that is because, many homeowners locked into low mortgage rates. 40% don't even have mortgages at this point. And then companies were able to term out and lock into lower debt for some period of time. It's the marginal borrower, right? It's the small businesses and middle to low income households that are feeling the burden right now. So I think monetary policy still works, but maybe not as restrictive as they had thought.
And as you say, that's what Lori Logan said. But Williams yesterday, Kathy, said that there's ample evidence that policy is restrictive. Are we finally getting disagreement among FOMC members? Are we finally there? And if it is disagreement, what does that mean when some members, when Powell starts to push for a cut, and you have Lori Logan saying policy may not be as restrictive as we thought?
Great point. I do think we are seeing, some divergence of opinion. That's healthy, and I think it's warranted, right, given the data. But I think, the evidence at this point, even for those who are a little more, I guess, on the dovish side, I don't know if you could characterize it that way, but the evidence has to be overwhelmingly clear at this point, and I think that's across the board for the FOMC. So I think when they do decide to cut rates, I would suspect that everyone will be on board, or at least you won't get that real objection to that, dissenters at a particular vote. But let me point out, I was just doing the math this morning to get the Fed's year-end Q4 of a Q4 core PCE number, you need to get a string of 0.2 increases monthly, and then sometime in August it has to decelerate to 0.1 per month. So it's really hard to get the 2.4, and that's why they've scaled back. Right, 3 rate cuts are no longer on the table.
Maybe it makes sense to join Torsten Slok and just throw your hat in the ring and say, look, it's statistically going to be pretty much a nightmare to get there. No cuts this year. I mean, that, given what you've just laid out as being a statistical challenge, maybe the more realistic thing that the market has yet to really grapple with is no cuts this year.
Yeah, it's quite possible. We, as you indicated, our baseline is September, but certainly it could be later. It could be no rate cuts this year. We're optimistic at some point you do see rental inflation roll over. Transportation costs, other service costs start to moderate. So if it's not this year, should be next year. But I think the bond market's kind of moved along with that, right? I think we have less than 2 full rate cuts priced in by year end. And the equity market, well, maybe marches to a slightly different drummer at this point.
It still feels like 2025 is unknown at this point, Kathy. And Manus and I have been talking about, as the whole world has been talking about this morning, of the historical nature, unprecedented nature of a presidential candidate who has been found guilty of crimes, is now a felon. When you look at 2025, the unknowingness of policy, the unknowingness of what immigration will look like, any volatility around what some might say is legitimacy of an election, which of course has been greatly disputed, no evidence that the past one hadn't been. But Kathy, what does that do to your 2025 outlook? How difficult is it to form at this point?
Well, I think this cycle, in and of itself, aside from any elections or the volatility of inflation, has just been really difficult, right? It's a post-COVID business cycle. We really haven't seen anything like this. It doesn't kind of move along those typical business cycle changes. And that said, if namely, for the Federal Reserve, and I think for the markets, it's inflation. The election, we'll see what that brings, and I'm really interested in the policies, right? Like, what policy do we get on trade, tariffs, taxes, immigration? To me,
Kathy,
those are the keys.
We're going to have to leave it there. Thank you so much for joining us this morning, Kathy Bostjancic of Nationwide Mutual Insurance. This is Bloomberg. This is Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day on this Friday. What a Friday. What a week it's already been. We're going to get a slew of economic data coming out with PCE 8:30 a.m. Eastern. It comes alongside personal income and spending. Then former President Donald Trump will be speaking at 11 a.m. Eastern after being found guilty on 34 counts. And then over the weekend, Manus, OPEC Plus will meet and is expected to prolong roughly 2 million barrels a day of output curbs in the second half. It's virtual, if I'm not mistaken, right, that meeting?
Yeah, they've gone virtual. Lots of reasons were put forward, potentially the health of the King of Saudi Arabia. But the big risk for OPEC watchers is whether they extend and come up with a plan going into 2025. But it's almost as if that's all dropped down the register. We've got 2 major events in Washington. One is the PCE, and the other is, of course, there isn't enough can be said about the history in the making in terms of the conviction of Donald Trump. He's now a felon.
Yes, and if we talk about this in the Bloomberg way of markets, it doesn't matter. Max Kettner says it doesn't. The fundamental earnings are strong. Yardeni says it matters for volatility in this market.
In terms of the impact on the parties, you're going to hear from Trump at 11 a.m. We'll have full coverage on that. And Pangaea says it just makes it harder for Trump to galvanize and unite the Republican Party. They'll debate that and more on Bloomberg Surveillance. From Danny and I, have a good weekend.